Hi everyone. I think we are all drawing a collective sigh of relief that 2020 has nearly passed. If there was ever a silver lining to such a terrible year, it's probably that it was such a great year for trading, with so much movement in financial markets. But now it's time to look to the year ahead and see what opportunities await us. My plan is to share with you what the top banks and analysts are expecting in currency, metals and cryptocurrencies this year, and posit some possible risks to those outlooks. GKFX Cambodia presents the week ahead. Let's start with Forex. And when we talk currencies, of course, we have to centre it around the US dollar, the world's reserve currency. As best as I can tell is that the consensus is for the US dollar to continue weakening in 2021. A number of the big banks, including Goldman, Bank of America and ING Bank, have concluded the euro dollar is heading up towards 1.25 in 2021. The main arguments for the dollar weakness are as follows. The Fed is keeping rates at zero. An economic recovery helped by the availability of vaccines will sour demand for the dollar as a haven. America's twin budget and the current account deficit means the US will have to fund itself with money from overseas, and that the US is losing its geopolitical dominance to China. So why might this not happen? Well, the dollar just dropped 10% on a trade-weighted basis since March. As the world reserve currency, how far can it really drop? The main risk, though, is that a big economic recovery doesn't take hold next year. After the shock of the pandemic, consumers could easily be saving more and spending less, while businesses will wait to invest until there is more clarity. If there is an economic malaise, it increases the odds that some kind of crisis sparks renewed demand for the dollar. Now, thinking about gold is almost the mirror image of the US dollar. The consensus appears to be for rising gold prices in 2021, despite a near 30% gain and a new record high in 2020. Credit Suisse forecasts gold will reach $2,200 and settle at $2,100 by year end. The main idea is that central banks have promised to keep interest rates low, which devalues currencies and makes gold more attractive. Good news on COVID-19 vaccines have seen gold sell off towards the end of 2020. If vaccine distribution goes especially well and a return to normal happens quicker than we think, gold might have a tough time. Probably the biggest question mark for gold is whether we see a return of inflation. Central banks have printed huge sums of money in 2020. If that money starts pushing up prices, gold stands to do well as an inflation hedge. So Bitcoin has reached over 20,000 for the first time thanks to increasing interest from institutional investors. The idea is that the smart money is now starting to believe Bitcoin is a worthwhile asset class. For example, the Guggenheim chief investment officer thinks Bitcoin should be worth 400,000. This is a slightly unusual turn of events because smart money normally gets into a trade first, not last. That's what makes them smart. I think the smart money is assuming that greater regulation of cryptocurrencies will attract new institutional money. The biggest risk, as far as I can see, is that regulators get the balance wrong and the red tape stops the wider adoption of Bitcoin by the general public. Right, thanks everyone. Good luck trading this week. I'll be back for the next week ahead video on January the 11th. So until then, have a very happy holidays and a happy new year. And of course, make sure to subscribe to our channel so you don't miss the next video.